and welcome back to my channel. My name is Jessica Morehouse and this channel is about all things money. And gosh, I did not know what to do this week's video on, so I thought it would be a great idea to ask you. And so I did a call out on the community page of my channel and also on my Instagram to ask, hey, do you have any investing questions? And I gathered a bunch. Some I'm probably gonna just make standalone videos about, but a bunch I'm just gonna answer in this video. So let's get to it. I'm going to be answering your investing questions. All right, let's do this. And in case you're like, wow, why do you look like a school teacher? Well, it's because this was my get up to be on the news. And also shout out to the audio guy from B&M Bloomberg who subscribed to this channel. Shout out to you. The first one I got was RRSP or TFSA, which is better and for what financial situation? So, and this will be an answer that I give probably repeatedly throughout this video, but it's because, I mean, it's just good advice. When you are considering what investment account to put your investments in, the first thing you should always be asking yourself is, what is this money for? As you probably can deduce from the name RRSP, Registered Retirement Savings Plan, the RRSP was developed to help you save for retirement. Now, of course, you can use it for a few other things, like you can participate in the first-time home buyers plan to help you with your down payment. You can also participate in the lifelong learning plan. But besides those two things, the RRSP is really just meant for you to save for retirement. And so if you need that money tomorrow, don't put it in your RRSP because you will be taxed and you'll never get that room back. For a TFSA, it is a great vehicle because it is so flexible. You can invest or save cash, though I wouldn't. I would really use that room for investments, but you can use that room for whatever purpose that you want. You can have multiple goals. It could be for a home down payment. It could be for your future retirement, but it could also be for a trip down the road. It could be saving up for your wedding. You can do whatever you want because you were not penalized for withdrawing that money out of that TFSA. Now, of course, the biggest difference between the RRSP and TFSA is their tax efficiencies. So your RRSP is a tax-deferred account. A tax-free savings account is obviously a tax-free account. So with your RRSP, you get a tax deduction when you make those contributions or whenever you want to claim those contributions on your tax return. And that can be great if you're in a high tax bracket trying to figure out ways to save money in taxes. And then the idea is that when you were retired, you'll be in a much lower tax bracket, can withdraw that money at a much lower tax rate. For your TFSA, you do not get those tax deductions. However, anything in that account can grow tax-free, which is awesome. If you are in a kind of lower income situation and you don't need those tax deductions, focus on your TFSA. If you really need those tax deductions and are trying to find ways to save on taxes, really use your RRSP. But ultimately, I think a great idea is to use both. Okay, next, I've got a very simple question, but I get this often. I have a short-term financial goal within 1 to 2 years. Where should I put my money? Well, you're gonna wanna make sure that you keep that money liquid for those 1 to 2 years. You really shouldn't be investing that money in the stock market because I know a lot of people wanna get those returns and you're hardly earning anything in a savings account, but guess what? What if the market tanks and the money in that account loses value and then you can no longer use it for your home down payment or going on a trip or whatever? You wanna make sure that you are keeping that money liquid, which just means easy to take out of the account and maintain its value. And so really you should be putting it into a high interest savings account, maybe some GICs. You can do T-bills if you want, though I don't know anyone our age who uses T-bills, or a money market fund. But really, I feel like those first two, those are great options, high interest savings account or a GIC. Okay, so the next question is, can you provide an overview of investing to understand the game compared to real estate? Which is easier to grasp? So really the question is, can you give me a very short explanation of investing in the stock market versus real estate investing? And I will do my best because that is a big loaded question. So first I'm actually gonna focus on real estate because on this platform, YouTube, my God, there are so many people that just have channels devoted to real estate investing. Now, for me personally, I don't really do that. I own my principal residence. I don't own, investment property. So I don't have personal experience with it, but I can share some of the pros and cons that go along with it. Now, I think the reason why real estate investing is so popular, especially online, is because it's much easier to understand than you know, all the different strategies that come with stock market investing. So when it comes to real estate investing, you are just buying this one asset, this property, and you are going to buy it at some price, hold on to it, and hopefully sell it in the future for a profit because it has increased in value over time. Very simple to understand. It's also a tangible thing that you can see. Now you can also buy a property and not just build equity, but also earn passive income by having some tenants and earning rent. Now, of course, there are some things that I feel like often get glazed over, like, well, first you need to have a lot of capital to start investing in real estate. It's expensive to get started, but it's actually very simple to implement. And as we've seen, you know, throughout history, real estate has been a really great bet. Although there's ups and downs in the real estate market, in general, it is one of those assets that will always appreciate in value because they're not making more land. Now, those are some of the pros. Cons, like I kind of mentioned, you need to have capital. So, you know, you have to be kind of in a privileged position to start real estate investing because you need to have money to begin with. Not only that, no matter if you are, you know, just buying a principal residence or you have real estate properties that you are renting out to tenants, there is a lot of extra money you have to pay to upkeep and maintain that asset. You can't just buy this one asset and just wait for it to appreciate, which you can do with, say, a stock or an ETF. You have to, you know, paint, update the roof, and do a bunch of things, replace everything in the house at some point if you keep it for long enough. It can be expensive. So you do also have to make sure that you're saving that money so you can pay for all of those things that you need to maintain. And the one big drawback about real estate investing is it is a very illiquid, which means it is not easy for you to get your cash out of that house. Of course, there are different methods where you can use a loan or a line of credit. But again, if you want to sell that property, let's hope that it is during a hot seller's market so you can get that profit. Not like what we're experiencing now, again, at least in Toronto, where a lot of homes are, you know, significantly lower in value compared to just 1 or 2 years ago. Whereas when you are investing in the stock market, if you don't want to have a stock or an ETF, you can easily, with a click of a button, sell that security for cash. Now, one thing I just want to say, because I get a lot of questions about, should I do stock market investing or real estate investing? I don't believe it has to be an either or. I think the ideal situation, similar to like the TFSA and the RRSP, do both. Why not diversify even more? Put your eggs in lots of different baskets. All right, so I got 2 questions that are pretty similar, so I'm just going to answer one of them and I'll answer the other one. But where should I start investing? What company or big bank should I use? Well, I have, of course, my thoughts. I have my own biases. I have talked on this channel about how I'm a passive investor. I like boring investing in low-cost index ETFs. That is how I invest. I'm not one of those people who will ever make videos about hot stock tips because that's just not my investment philosophy. And so when you ask a big question like, how do I start investing? I mean, it's a big question. Now, of course, I may suggest that you want to take a look at my own investing course. I've had it for a few years now. It's called Wealth Building Blueprint for Canadians. It teaches you all the fundamentals of investing and then how to get started investing if you want to follow the passive investment strategy. So if you want to do like me and invest in a boring portfolio of index funds, that is what my course is about. But to actually answer your question, how do you get started? These are the things that you need to ask yourself. So first, what are your investment goals? Second, what is the investment strategy that you want to follow? Third, what do you want your investment portfolio for that particular goal to look like? And with that, what kind of securities do you want to buy to put into that investment portfolio? And then lastly, what route do you want to take to invest? Do you want to use a, full service brokerage? So a investment professional will do it all for you. Do you want to use a robo-advisor where it's very automated, but there's a lot of transparency? Again, you're just going to be doing passive investing really. Or do you want to do self-directed investing where you are your own portfolio manager? You do it all your own. You can buy all the stocks you want. You can invest in index funds like me. You can do whatever you want, totally up to you. So if you answer lots of those questions, I think it will help give you that kind of clarity and help you figure out what is your next step. All right, next we've got what percentage of your portfolio should be allocated for each sector. You know what answer I'm gonna give. It really depends on what your goal is in your investment strategy. I don't know what, weightings you should have in your portfolio. There's so many other things you have to answer before it's clear what your weightings should be. And there's a lot of different methods. There's a lot of books that talk about all the different ways that you can, figure out this sector or this region, things like that. Speaking more to index investing, it really comes down to getting exposure to different asset classes. So you've got your fixed income, you've got your equities, and within those asset classes, then you want to section off, pieces of that pie to different markets. So Canada, US, international markets, emerging markets. Now the question is, what should the weightings be for each of those markets? And that is, again, not a very easy question to answer because, again, there's lots of different methodologies and strategies out there. This is literally people's full-time jobs to figure out the best allocation for portfolios. So that's usually when I'd recommend, if you don't know where to start, use a robo-advisor or invest in an asset allocation or target date ETF, because that does all the guesswork for you. You don't have to figure out what the weightings of all those should be. But again, there are lots of different methods out there that you can read about, different models that already exist that you can just copy. Okay, let's see if I've gotten any more since I posted on Instagram. One was thoughts on Canadian couch potato method of investing. So surprise, the Canadian couch potato method is actually not something he invented. It's just a fun little term that Dan Bortolotti used for his blog and his podcast. That's just passive investing, also known as index investing, also known as indexing. I'm a big fan, obviously, and also would highly recommend checking out Dan's book, Reboot Your Portfolio. It's great. It's Canadian based, all about index investing and how to reboot your portfolio. So I'm going to leave it there because I'm sure I will do this again and we'll answer other investing questions. So hopefully this was helpful. But hey, if you do want to help for that next video, make sure you put your different investing questions in the comments and then I will keep those for next time. But thanks so much for watching and I will see you next time.